Hi guys, welcome back to another YouTube video. Today we're going to be talking about manipulation and displacement. Let me write this down right here somewhere. Alright, so we're going to be talking about manipulation and displacement today. So manipulation would be your liquidity sweeps and displacement would be price displaying, and I'll go over some examples today explaining how that looks like on the market. And you guys can also do this yourself if you hop on the charts on the candles. And you could also use the line graph, but I would suggest you guys use the candles for this because most of the time when liquidity does get swept, it's more wick instead of the full body of the candle. But I'll go over some examples and explain to you guys how this looks like on the market. So we're gonna start on the 5 minute. It's better to do this on a higher time frame, like the 1 or the 4 hour, because that's how you find your bias and that's how you find where price is likely to go to based on displacing or manipulating. So here we have a 5 minute manipulation. So we have a liquidity sweep right here, as you can see, comes up into this fair value gap and then draws down lower. Let's go over some. I'm gonna show you a manipulation, and then after that, I'm gonna show you some examples uh, of displacement. So let's see where we can. So here we have a small 5 minute sweep. Let's see. And I'm also going to show you guys this on the higher time frame so that you can see. Let's see that perfect highs right there. Just waiting to. I think. Yeah, they actually did get swept right there, so we can mark that out. Say right here to here. So liquidity sweep, and then comes back down to. I'm not sure right now. Probably it came back down to this fair value gap, and we're gonna talk about that later on, and later on this week or next week. But let's go over some more liquidity sweeps. So let's see. Let's go on a higher time frame. Let's go on the 1 hour actually. All right, so we're on the 1 hour, and we're gonna try to spot some of these liquidity sweeps. So here we have this liquidity sweep right here. As you can see, price didn't displace through. It actually, let me zoom in a little closer. So as you can see, price didn't display like it did. I'll show you displacement in a second. So it didn't displace would be a break of structure. Right here, we did have a break of structure, but when we came up to this high, as you can see, let me mark that out. We didn't displace through it. We kind of went up into it and then came a little back down. So it wasn't a strong identification that it's gonna go up. It was kind of like not strong because only the wick went past it. So let's see. Let's see. Let me try to find one more example for you guys, and then you guys can also go on your charts and kind of look at this. So here we have this example, but this is kind of a complicated example just because we did go up and we did end up coming down. As you can see, it was a sweep, but at the end of the day, we ended up displacing up to the upside. We just came down for something else, probably on a smaller time frame. So this was more of a displacement, and let's find some on the 4 hour before we jump into displacement. So let's see what we have. Okay, so here we have a manipulation liquidity sweep right here. As you can see, the wick. Here we have another manipulation. The wick went up, came back down. And let's get one more example. So use this as an example. So as you can see, we did have price displace, and we did end up coming all the way back down. So this isn't 100% accurate, because you also have to take into consideration that price could always change, and price could always go up and come back down and switch based on breakup structure and other things. So obviously you would need like other things into your trading plan. You can't just like use displacement manipulation to take your trades. You have to use your fair value gaps, your confluences, and all of that. So, and whether you guys have other trading strategies or whatever, you guys can implement this. It helps a lot. Just knowing, just being able to read market structure in general will help you guys a lot. So, as you can see here, we have another liquidity sweep right here. Price went up, came back down, and okay, I would say that to have a full displacement on a lower time chart, you'll need a breakup structure past the high that it went past previous. So let's give a good example. So say right here, we did displace, but as you can see, we didn't have a breakup structure back to the upside after the displacement. So right here, same thing. We didn't have a breakup structure out of it, so it wouldn't count. Okay, right here neither. And okay. Now we're gonna jump into displacement. So we can start off by this obvious displacement right here. As you can see, price fully displaced through, and we had a break of structure right here. Mark that out. So we did have a break of structure right here, and if you guys don't believe me, we can go on to the line chart, and we can see that right here we broke structure. And even if you don't want to count that, if you miss that, you can always just count this as the breakup structure, and then it goes up. Can also, let's go back to the candle. So let's look for some other displacements that I can show you guys. Let's go into the 1 hour. Like I said, the 1 and the 4 hours, so higher time frames, especially if you're day trading. If you're swing trading, I would suggest using daily and weekly charts for this. So let's wait for this to load. All right, so here, as you can see, we have a displacement, and also displacement can be made by acknowledging that we have a fair value gap right here. As soon as it displaces, we have a fair value gap, and I'll talk about that in a later video. But basically, that is more of a stronger confluence, especially if it comes back into that and then price comes back out. Then that's for sure market change, because the breakup structure is also the displacement. So yeah, let's just wait for this to load, and I'll give you guys some more examples. So here we have displacement right here, and then we already drew that one. Right here we have a displacement right here to the upside. We displaced right here to the downside. Let's see. Displaced right there. Already marked that out. Let's see, we did displace right here to the upside. Okay, and also I forgot to mention, like, when you have this right here, just to make sure, we can go on to the 1 minute. All right, guys, we're just going to use this example to show you what I'm talking about. So basically, we have a displacement right here. We can jump onto the 1 minute, and let's see where that's at. So I believe that's right here. Okay, so yeah, we have that displacement right here. Okay, and as you can see, just to be 100% sure that this is a displacement, you can always draw this fair value gap right here, or any fair value gap, or any confluences that I'm going to show you this week and next week. And if you see this fully respected and break structure, then that is definitely 100% a displacement. So you can go back onto the 1 hour and you can name that down, and you can write it down as a displacement. So remember this, and remember that you can do that. If you can't tell if something's a displacement on a higher time frame, you can always drop down to a lower time frame and look for a retracement, like how I just showed you guys. So yeah, it would help. I would say go around the charts and then draw out all of these displacements like this, and then I would say go into the 1 minute and just watch how price reacts on the lower time frame in that area to see how you can catch and how you can identify these displacements a little better. And then for manipulations, I explained to you guys that after it passes the high or the low, to wait for a break of structure to identify market switch or market continuation. So yeah, let's just wait for this to load. Okay, so let's see where we're at. All right, so we had that one right there, and then we marked out another one over here. And I'll explain to you guys fair value gaps, breaker blocks, order blocks, either tomorrow and then next week. Also, I'll be talking about all the confluences. This week, I'm going to be focusing mainly on just what's more important, and starts off with a liquidity sweep, and then from there it's important to know your bias, so the trend, and it's also important to know whether price is displacing or manipulating. So those are the first things I'm trying to show you guys. And where did we mark out? Let's try to find it right here. I believe, I'm not sure if it was that. Let me go back onto the 1 hour and see where we're at. So, okay, so I had marked it over here. So I'm gonna start over here and I'm gonna mark it over here. So, let's say you just go to this right here, this displacement right here. Let's identify this. So I have displacement right here. We're gonna go on to the 1 minute. It makes it easier since it's closer because it takes a while to load for me. So we're right here. Let's see. All right, so here we have displacement right here. So we're gonna see what price does that helps us identify this displacement. So we're gonna mark out some of these fair value gaps. So here we have a fair value gap right here, and then right here we have another fair value gap. right here that already got used, but we can also implement it because you guys might not believe me when I say this, but old fair value gaps are still, you can still use them. And that's just how it works. And if you guys don't believe me, go on the charts and draw out all your fair value gaps and see what price does. So basically, price came up into this, kind of swept some of these little highs, and swept all of these highs, came up to these fair value gaps, and then respected it. As you can see, we have a break of structure right there. And right there, that's how you can fully tell that this is a displacement. But price did, you can always wait for another one. Let's see if we can. So we have a small displacement right here, and it looks like we don't have any other ways to identify this, just this right here. So if on the 1 hour chart you assume that this might displace down to the downside, then you're going to go down to the 1 hour or the 5 hour and look for, let's see if we can find something on the 5 minute. 5 minute, I meant, not 5 hours. Sorry about that. Let's see. All right, so we're here. We had a displacement. We went up into this 5 minute fair value gap right here. So as you can see, we went up, we respected it, we had a break of structure, so that is confirming that this is a displacement. And when we have a manipulation, it's the opposite. Basically, we'll come down right here. Let me show you guys. So if we have a displacement, we'll come down right here, and we'll go up and we'll respect a fair value gap right there, and then we'll end up coming down. So let's say it looks like that. And then let's say we have this fair value gap right here, respects it fully and goes up. Then we have a confirmation that that is just a manipulation. So that's the video for today. I hope you guys paid attention and I hope you guys understood. And if I explained it in a way that you guys didn't understand, please let me know down in the comments and I'll make a part 2 explaining in depth how to find displacement and manipulation, how to identify the differences. So thank you guys for watching. Please like and subscribe and share this to anyone that you want them to learn, or anyone that you want that you think they should learn this because they fail a lot of accounts, or they lose a lot of prop firm accounts or something. So yeah, I thank you guys for watching.